Hi, and welcome to our daily recap. So today I'm going to recap day 132, and it's November 7th, 2024 Thursday. Today I didn't get any trades on both EU as well as GU. So let's jump into the whiteboard and see what happened today and why I didn't get any trades on this day. Starting with EU, the swing structure is bullish, the internal structure is bearish, and you can see the sharp push down and the price resistance and liquidity below. Zooming in, I consider when this is a high probability demand where I expected the price to bounce off and then push the price up to take out this price and liquidity. But since this demand has been rallied through, I can now consider this as a breaker block. So I usually don't trade using breaker blocks directly, just for the just to identify the inflection point. I used to consider the breaker blocks. I can even consider this complete uh, buy to sell order flow, sell to buy order flow as the demand, but I usually consider the pivots in the daily time frame. So this pivot candle is not yet being mitigated with this sell side liquidity below. I expected this to be high probability demand, but since this was rallied through, I can now consider this as a breaker block. So that's the game plan today. So coming into the 4-hour chart, same. The swing structure is bearish. This is a strong high. The weak low is yet to be formed, and this is the internal breakout structure on the downside. So if the price mitigates to this fair value gap, I can consider this as the weak internal low. And once the price breaks down, once the price makes a bearish above, then I can consider this as new internal swing, internal high. So to me again, identify the bias. Okay. This is, I can consider this as the buy side liquidity because the price can go up to mitigate into this for the 4-hour fair value gap. And this can be the breakaway gap, and this could be the fair value gap because it is within the daily breakup block. So I can consider this as my buy side liquidity. And also, a ton of low resistance liquidity is also there because price is not yet a stop to sell side liquidity. It has just rallied up. But in the daily, you can see price ton of sell side liquidity. Price as stuff with ton of sell side liquidity, but that sell side liquidity could be that sell side liquidity sweep could be to sweep the buy side liquidity in the form of fair value gap. So once that buy side liquidity is swept, again the price would seek the sell side liquidity, which is below this, uh, which is the sell side liquidity. Okay, on this point. So coming into the H1, the swing structure is bearish, internal is also bearish. So what I can expect, continuation of the internal order flow. It's as simple. A ton of low resistance securities we build here, and this is the weak internal low. So in the 4-hour, I consider this as the low resistance liquidity. Now it is very clear this is the weak internal low, this is the strong internal high, and this is the buy side liquidity. So very simple. What I can expect is price to sweep out this buy side liquidity and then stop bearish. Once the price stops bearish, then I can look for this entry right here and then target the weak internal low. I'll be getting sufficient risk reward from this trade. It's as simple as that. So let me read out annotations for you. The price swept the major sell side liquidity in the daily. Thus, I need to see a strong buy side liquidation before the price starts to move down. So that's why I'm seeking a strong buy side liquidation, and that buy side liquidation is in the form of the 4-hour fair value gap. Ideally, it is the 4-hour buy side liquidity that I'm expecting the price to take and chop bearish, which then gives me confirmation for the sales. As I mentioned earlier, thus, phase A2 sales are valid today, and for that, I need to see the price take out the 4-hour buy sell liquidity and chop bearish. I'll trade from the freshly formed A1. So the game plan is very simple. It's very straightforward. There's nothing to be complicated right here. But uh, with the heavy buy side liquidation, the buy with the heavy sell side liquidation, the buy side liquidity is not enough for the price to come down. Price is seeking furthermore buy side liquidation. So that's why during the session, price actually stopped this buy side liquidity. Initially, I was interested for sells if the price takes out this low. Buy side liquidity sweep and then push down could form a fresh POI where I can look for sells, but that didn't happen at the first place. price made a strong bearish, uh, and the second candle struck the highs and made a strong bearish push down. Then expected that okay, London could have made the high of the day, and New York could start to distribute, and then make a start a small pullback. We can look to trade from this POR, but that also didn't happen. Price took this buy side liquidity, made a strong bearish push down, and then again it started to rally up, and then eventually made the bullish high boss. So once the bullish high boss is confirmed, then I know that the demand is in control today. So which is the high probability demand. So this is the high probability demand. Why? It has flipped this supply. So I waited for the price to mitigate this demand and then push further up. But once the price made the bullish high boss, it never took back. It just kept moving and there is no trade today. So this is what happened on this day. So both shorts as well as longs, I was not able to capitalize because the entry model, I didn't get suitable confirmations for me to take the trades. So that's what happened today on EU. Jumping into GU. So it is very important to you to know why I didn't get any trades because you will not get trades on the regular basis. So there will be some days where you have to sit idle and wait for the price action to play out, but still it won't play out. Your game plan should be very simple, your expectations should be very simple and logical, but still it won't play out. So there you go. In the GU, the swing structure is bullish, internal is bearish. So let me zoom in so that you have a clear idea. Here you can see the price has swept the buy side liquidity, and first the price mitigated the demand, swept the buy side liquidity, which means this low failed to take out this high, and this low became weak, and now the price support this low. Now what happened? This low, this high failed to take out this low, which means this high is now weak. So I can expect the price to push up and take out this high, liquidate or close above, whatever it can do, and then it can push down. Currently, what I'm expecting, this pushing down is I'm not sure, but this price moving up to take out this strong high, but I'm very sure because this high failed to take out this low. So that's part of my strategy. And one more thing is that that is the first point. And the second point that I need to consider is when a demand or a supply has multiple mitigations, which means that the orders in the demand are getting filled, and then the using those orders, the market is pushing above or below. But now, since the price has already absorbed some of the orders, I will push the price up, and again it has come down, which means the number of orders would be less when compared to the previous mitigation. So I can't expect the price to move all the way up to take out this strong high. Rather, with a small bullish reaction, price can come down and invalidate this demand because there is no orders left. That's what I have written right here. So two signals back to back with contradictory ideology. So that's why we are having the 4-hour chart and the H1 chart to guide me through the session. So this is the 4-hour chart. The swing structure is bearish. Internal is also bearish. And this is the 4-hour POI where I'm expecting the price to make the next higher low. Sorry, yeah, higher low. So lower high, lower high. So price has liquidated the weak swing high and it has made a strong liquidation here and then pushed the price up. So I can expect this demand to hold until and once I get a strong bearish push down, I can look for shorts. Today I'm having a bearish bias. Why? Price is now making and swing pull back towards the premium prices. Price did not take out the swing low, rather liquidated it. This makes me doubt whether the swing high is weak and could be taken out. But with the current momentum, I'll stick with the sells and use the 4 RPOI to look for the bearish confirmations in the H1. So, though there are contradictory ideology, I stick with this bearish momentum. I believed in this bearish momentum. That's why I was looking for shorts. But I must keep in mind that the opposite could be also true because, as I already told you, the demand could stick around and then push the price further up into this pivot can. It is possible, or it can take out this buy sell liquidity above. Anything is possible. So jumping into the external chart, this is the swing structure. Swing structure is bearish, internal is bullish, which means that the price is not in the phase C, but the phase C is completed right here. The price is in the phase D, low probability phase D, because price did not take out the swing high, I mean swing low. So when the price takes out the swing low and then it is I mean the pro swing, then we call it as phase D, and that becomes high probability when it has mitigated the high time frame POI. But now price did not take out the swing high and it did not mitigate high time frame POI. So this is a very low probability longs, according to me. So I'll just stick with shorts. This is the POI which is inside the 4-hour POI, which can be mitigated. But I'm not going to take trade immediately after the price mitigates the POI. I'll be looking for the price with soft bearish and then look for this fresh POI to trade from. And even in this fresh POI, I will not take trades directly. I'll wait for the M15 to give me signals. Then I can look for trades. So I am restricting my trade. Good trader is always a restricted trader. I am restricting myself with rules and rules and regulations. So this is what prevents me to get into FOMO. So to the content session, yeah, it's just the annotation of what I explained earlier. You can just have a look at this one. So if the price mitigates this POI, then I can look for top bearish and then try tapping into this POI. For something to target, I'll be having the Asian lows as well as the previous day low, as well as the strong internal low. Moreover, I'll be having this weak swing low. So a lot of things to be targeted when the price stops bearish. Yeah, price did not mitigate this demand and it started to push down. So maybe this could become the trap for a trap to trap the early sellers because price did not mitigate the supply. So price can make a strong push down and then again it can rally up and then take out all the buy sell liquidity. Then it can make the actual chalk bearish and then price can push down. And it happened as expected. But the chalk bearish did not happen today. So anyway, even if I consider this as my chalk bearish, I this as my chalk bearish, I would have not bought any trades because this is one straight push up. So this would trap the people who consider this as a POI and place the trade directly in the sell limit orders. But what I do is using M15, I'll look for liquidity points and then I place the LC model, which means only if there is bearish momentum, I'll be getting tagged. I'll not be I'll, I'll not place sell limit orders right. So it's safe for me to place the trades right here and price invalidated this supply and I didn't get any trades. So yeah, that's it from today. So uh, even if there is the price actually chalk bullish, so there is no chance that I could take the trade from this demand out of gold. So yeah, in both GU as well as CU, I didn't get any trades on this day. So it is what it is. Sometimes you have a clear game plan and price doesn't listen to your game plan. It doesn't what where the liquidity is. And yeah, price took out the buy side liquidity above. Price is in the now it is in the mostly premium prices. Now, if I'm able to get the chalk bearish, so, I mean, the next day, suppose if the price takes out this Asian eye and then chalks bearish, then that would create a fresh viewer. Then I can look for shorts because price is now in the premium prices and can easily target the short. Okay, guys, that's it from my side. So there is no trades on both EU as well as CU. So see you tomorrow on the next day, November 8, 2024. Until then, cheers, guys. Bye.